Hey everyone, I'm here to do an analysis on NVIDIA. I had a good friend of mine asking me about this earlier today. Also, we talked about it a little bit last week, and so I figured it was probably worthwhile to kind of go over kind of what my views are on NVIDIA, and it actually is a good opportunity to talk a little bit about wedges and how to trade these wedges that NVIDIA is currently consolidating in. So first off, let's first take a look to get the technicals out of the way. Look at a weekly chart on NVIDIA. All in all, go into the logarithmic scale. It looks pretty bullish. It does look pretty bullish, but what I will say is, we are in a little bit of a consolidation pattern right here, and it does look. And if I turn off my divergence detectors here, um, it does look like we have started to maybe move into a new downtrend. So being very careful about this. I think that there could be some potential for maybe a little bit of a trap to occur here, but we are currently trading below. That would be our 50 exponential. Our green trend line is our 55. Our 55 exponential, and then of course we have our 21 exponential. Right now we're trading between those on the weekly. So let me zoom in just a little bit and just kind of show this to you here. We did have a bearish cross. I'm not calling this a death cross because the death cross is different, but we had a bearish cross on our moving averages, and we're currently trading below our 55 exponential on the weekly, which is not a good sign. We had a good rejection off of it up here when NVIDIA was at approximately $190. We spent actually 1, 2, 3, 4 weeks, an entire month we spent, having resistance here at $190. We had another rejection down here at 178, and right now we had a front run there at 173. And we're getting a little bit more consolidation above the 21 exponential, which could be seen as bullish, but moving averages don't control the price, right? The buyers and the sellers control the price. So we're going to be looking for a break of this consolidation pattern that we're currently sitting in. So I'll go ahead and I'm going to turn off a couple more things here so we can get just a cleaner chart. I'm going to keep my volume profile on here. You can see our point of control here on the volume profile for our visible range is sitting here right at $160. And right now we're trading at $168.25 roughly. But let's go to, say, a daily chart. Let's take a look at the daily chart. A couple things here that are very interesting. All right, we're going to ignore this indicator down here for right now. I'll explain what that is here in just a moment. But what we have from a lower time frame perspective, I'm looking at a daily as opposed to the weekly I was looking at before. We have, of course, we had our top up here at almost $300, about 292 to let's see here, 292. Yeah, we'll call it 292. And then we had a move down. So now there's a couple ways that you can trade these consolidation patterns. Typically what you've got traders that like to take a look at this and say, okay, well, I'm going to trade the flagpole, right? The flagpole theory. So that's basically where you take the top here and you go all the way down to the bottom down here. I'm going to get a straight line. I'm holding the shift key as I'm doing this, and I'm going to go right down here. Okay, then I'm going to take this and let me just squish the chart down a little bit and move it around. And I'm going to take this and I'm going to basically move this, and I'm going to say, well, when we break down, that's basically our measured move that we're going to be trading off of. So I'm going to predict that we're going to break down at this point. It's not my official prediction. That's just kind of where I'm going with this. And so with that, that makes my target let me move off of the logarithmic because I think that really kind of screwed this up a little bit. Let me try this again. Okay, again, going from my top here, my log scale, I believe, messed this up a little bit because that took us down below 0, and obviously that's not possible. All right, so we've got this, and then let's move it down to here like we were before. And that's going to make our target, nope, it really does. It goes below 0. So obviously that is impossible. It is not possible for us to use that theory as a potential play. So that's sort of gone out the window. So another way that we can play this is going a little bit based off of Elliott Wave and a measured move based off of the wedge. Okay, so let's take a good old Fibonacci tool. So I'm going to use my fib retracement. I'm going to start here at the top, and I'm going to work my way down here. And I'm going to be looking for a 23.6 extension of this. And when I say 23.6 extension, what Fibonacci does, it basically predicts, or not predicts, but measures your retracement and your extensions. So we had a retracement and consolidation right here at the 382, which is perfect for a wave 4 and moving into a wave 5. So we are likely in a wave 4 right now. So we had something like a 1, 2, and then we had a 3, and then here's our 4, and now we're consolidating, and then we're going to move into our 5. And our 5, our 23.6 extension is going to be about 85 bucks. So that is a valid target for NVIDIA, $85. So if I were to draw this based off of where the price is right now, I'm just going to put this right here where the price is at this very moment in time. I'm going to take this down to about $85. Which is, about a 49–50% move from where we are right now. Now, stop losses. I always talk about stop losses and how important stop losses are. All right, so my stop loss, I want to be on the other side of this red trend line that we are consolidating inside of right now. So let me just magnify this just a little bit and get us a little more clarity here. We're going to be looking for our stop loss to be about right here where this high was. That's going to be about a 3.4% risk. If you want to be a little more risky, you can do that, but you have to put it right here. This has to be at about $179. You've got to get out of the trade at that point. So right now we're still consolidating in here. And then if we're looking at this from an Elliott perspective, this is perfect, what we are seeing right now. So basically we're seeing an A, a B, a C, a D, and then we're going in for the E right now. So now was the E up here? Maybe. Was the E going to go a little higher? It's possible. It's possible that I could go up here. I'm not betting that it's going to go any higher. So I'm betting that the E was somewhere around here, and now we're basically starting to create a wave pattern to get ourselves down. Another reason why I'm thinking this is because we have a good gap here, which leads me to believe that we are going to see downside one way or another. You're going to see some downside down here to, probably it's going to take us down to about $150 again. Something else, basically looking at the volume profile in our visible range here, again with our point of control being at $160, and we have our developing point of controls, sitting here. We have our upper range here at about $174, which is where I was saying you should probably put your first stop loss, and then down here at the bottom, looking at about $150 or $148.50. Which is where I was saying that you probably might want to consider maybe taking some profit off the table. You have to pay yourself along the way. Short positions tend to be a little risky, and if you're looking at doing options, you have your time decay that you've got on your options trades. But these are areas that I am looking for. This 0.5 and this one that you see down here at $126.80 and $96, these are based off of just the size of the wedge. So we're looking at the size of the wedge, again breaking down from about right here. You're looking at half the size of the wedge here at $126. We'll call it $125 for good measure. And then you have 100% of the wedge sitting here at about $100. Again, calling it $100 for good measure. So just averaging this out. But then you have the algo target, which is at about $85. So you have 4 places to take profit. The first place you're going to be looking at somewhere around here, around $150, which is our gap play. Then you have your 50% of the wedge measured move, which is really going to create sort of a double bottom in this range, about $125. So that's your second target. Your third target is going to be at about $100. I would expect $100 to have a pretty significant reaction just based on the psychological nature of it. So you got $100, and then of course your algo target, which is going to be at about $85, which is going to be your 23.6% extension of this downward move. Now, what do I expect is going to happen once we hit that? Well, that's a good question. I'm going to move back to my 3-day chart to take a look at this. And let me just go ahead and move this and pull that out. Okay, so let's say we get to our target, which is at $85. What am I going to expect to happen at $85? And the other thing that's really interesting about this, if you take a look at our volume profile, you've got a good point of control here at about $105, which is pretty significant. You've got, part of your range here. You have your good reaction on your bearish reaction here at this range, and we're looking at the blue lines that are created by the volume profile. And then the lower region of this is at $78. So that's an overextension, if you ask me. I don't think that we will get there on this move. It's possible that we will. But what I'm expecting to happen, again, looking at this from our high up here to our low that we're saying is going to be down here by 85 bucks, we're going to be looking at about a reaction from $85 up to about $188, maybe to $213. I do think NVIDIA is potentially in a little bit of a downtrend. It's obvious that it is, but I do think that there is more continuation to the downside. And what I would expect to see is our algo target to hit here $85 probably is going to be a wick. It's probably going to be some type of capitulation. Once the stop losses here at $100 get hit, you're going to see a move down to fill this trade, assuming that we get there. Because again, we've got 4 targets that we're looking at. We talked about getting out down here 150, then 125, then 100, then $85. So assuming that we hit all 4 of those targets, we're going to see a reaction, a bullish reaction off of that, and that's going to get us all the way back up here to about 189 to $214. Now that's in a perfect world. We still have to wait to see where this is all going to play out. But these are the targets that you're going to be looking for. You're going to see a reaction. You're going to see a bullish reaction. Once we get to this, we're going to be looking for some bullish divergence, but definitely we're going to be looking for a reaction to come off of that. So you've got some gaps that you're looking at. You've got other things that we're looking at here. But I do think that this wedge is going to play out and continue to the downside. So keep an eye out for that, definitely. And so that's the thoughts I have on NVIDIA. So that's what I'm looking at. If you have any questions, feel free to pop in the Discord. I'll be more than happy to answer any of those questions for you. So have a good day, everyone.